So there's a code to having a successful real estate career, and there's a code to being a successful realtor. That's what we teach in here, my friend. I'm Mark McInerney, President and CEO of CodeMark Financial. Welcome to Mortgage Money Genius. In here, we teach realtors just like you on all of the aspects of the most important part of the real estate transaction, the mortgage process. Today, we're going to talk about loans for foreign national buyers, your foreign national buyers. Sit back, relax. 3, 2, 1. Off we go.
I just wanna be your superstar, 'cause it's not where you're born, it's where you are.
All right. Welcome back. And thank you for always joining us each and every week. All right, so you are becoming really good at understanding this conversation inside of non-QM loans. And just to give you a brief recap, there are basically two kinds of loans. And inside of those loans or types of loans, there are a bunch of other kind of sub-loans, if you will. But the categories are QM loans, or which is your traditional lending, like conventional, FHA, VA, USDA, jumbo, much of what you're probably familiar with. And then there's non-QM loans. And the non-QM loans is a space that has been created for those buyers that don't fit inside the box of the QM structure, which is good. I'm a firm believer that everybody deserves the opportunity at home ownership. Non-QM loans fits the space of arguably people like you and me. What do I mean by that? Entrepreneurs, self-employed buyers, investors, those that get inside of real estate and are looking to still qualify for a mortgage regardless of the profile that they have. Thank God for non-QM loans. So today we're going to talk about foreign nationals. It's very important to actually consider this buyer as a potential client of yours. In Texas, we are a melting pot of different backgrounds. And actually, so is this beautiful country. But being here in Texas, there are a lot of, we have a lot of people that come from Mexico, Canada, Central America, South America, and even specifically here in the areas of like Houston, Dallas, and Austin because of the industries there. You know, a lot of people also coming from Europe. So how do these types of, transplants afford a house? Because if they're especially going to come over here and work, and then that they know that they're going to be here for a while, most of them understand the value in having a home versus renting one. So let's take a look at this particular program for foreign nationals. So you don't have to memorize what all of these different visas are, okay? A visa is just basically a ticket in and out of our country. Heck, visas are tickets in and out of all other countries too. If you've traveled abroad and you have gone to some of the more exotic places, you might have needed also a visa for the purpose of traveling in and out of those particular countries. It is just basically a piece of paperwork, again, that allows someone from a foreign country to come over here and establish a residency for the purpose of visiting and or working. In this case, I should say, take a look here at the list of different types of visas of which your client would already know about anyway. You would just need to know to ask them, do you have one of these types of visas when they're here? A B1, a B2, an H2, an H3, an I, a J1, J2, O2, P1, or P2. Those would be the types of visas that in most cases would fit for a foreign national loan program. Now, it's worth noting here as a quick little footnote that there are actually QM loans that will also afford a buyer with a visa. This is not just the only route, okay? Between knowing this and knowing us, we'd be able to help educate as well as make an informed decision with you and your buyer, foreign national buyer, on which program would make the most sense. Getting back to the details, one of the other things that would be required though, of course, since they wouldn't have like a driver's license locally perhaps or a local state ID, passport would be required. And then there's this other form that these lenders have, which is an EAD, which is basically the verification of the employment that they are actually here authorized to basically work in our country. Another couple of things to take into consideration: no credit score is okay, which is very good. I mean, how does somebody that is freshly moved to this country establish credit? They might know that it's important to do it, but it's very hard to establish credit without a Social Security number. And if you're not born here, you're not given a Social Security number. Okay? Now, if you look further down, though, one could register for what is called an ITIN number, which ITIN stands for Individual Tax Identification Number. Okay? So that is how someone would get it. So somebody with an ITIN number works for this. Also, foreign credit is also acceptable. So that with qualifying countries, foreign credit and the established foreign credit that this particular borrower would have, usually having to show at least 2 years worth, would be enough for paper documentation for qualifying for this particular type of loan program. I mentioned here that all of these loans are full doc. So in other words, there is no stated type of loan program inside of the foreign national space. There's no stated, or there is no or low doc loan program. There is actually a tremendous amount of paperwork that is required, again, just because the profile is not established in this country. And then they will allow debt to income up to 50%, which mirrors a little bit more of the QM style for VA loans, USDA loans, and FHA loans. So it affords a foreign national to kind of push the line up on the higher limit if they wanted to afford more home, right? Especially if they're coming from a foreign country with a big family. Also, something to consider here is most of these loans are going to be on adjustable rate mortgages, or ARMs. And the ones that they offer here are typically a 3-1 ARM, which means it would be a fixed rate for 3 years and then adjust thereafter, a 5-year ARM, or up even to a 10-year ARM. Usually the differences between, let's say, the 3 of those would specifically be down payment. You know, how much money are they putting down? Is it more? Is it less? That affords them the opportunity to have a little bit more negotiating pieces, you know, with all of this. And in most cases, it's worth noting as well that the down payment requirement is going to be at least 20% down. There is nothing less than that inside of the foreign national space. In that case, as I said, they do walk and talk like a lot of these other non-QM loans where the 20% down minimum is required. And lastly here, interest rates starting at 5%. Again, it's going to be contingent on the overall profile of that style buyer. And again, it could depend if they do have a credit score and the credit score is high, that they have established some credit. That lends a little more credence to the fact that, okay, we can afford to offer them a lower rate. Also, if they're putting more money down, that actually just shows more commitment to the loan relationship in and of itself. Take a moment, let Freddie pull up these slides so that you can see the recap on all of these, and we'll be back in a moment. Okay, this is just another one of those tools that is very useful to have, especially if maybe you come from a foreign country yourself, especially here in this state of Texas. So maybe you're marketing to other home buyers that are part of the country you've come from. Now you have a program to be able to offer to them and then actually be that liaison from that country to this country and then provide the opportunity to home ownership. This is good stuff, guys. Do me a favor, would you? Like, comment, and share. And you are continuing to go on the path to becoming a mortgage genius. I love it. I'm Mark McInerney, President and CEO of CodeMark Financial. Thanks for joining again today. We'll see you.